What is up, guys? Welcome back to another episode of Bitcoin and Markets. Today, we're going to do a live reaction to CPI. This is a much anticipated January CPI coming out today on Valentine's Day. And so we're going to keep refreshing that page, the BLS website. That should be coming out in about 6 minutes or so. At 8:30. But before that, I do have an article I wanted to read through as a primer to this. So let's go to this article. This comes via Zero Hedge, and the headline is Full CPI and Market Reaction Preview. Everyone expects a hotter print. While some will be secretly asking Chat GPT, I always want to say Chat GPT. No, I don't know. I always want to make that something different in my head. To write a poem for their loved ones tomorrow. Violets are blue, roses are red, humans are stupid, and soon we'll all be dead. Those following markets will only care about one thing, the January CPI report, especially after the BLS just revised its seasonal adjustments and weight factors. Here's what to expect tomorrow and how the market may react, and that's this morning. We start off with the big picture, courtesy of Newsquawk, which writes that headline consumer prices are expected to rise 0.5% month over month in January. I love that. I love that they are going towards month over month, because if you rewind the clock just 6 months, nobody's talking about month over month. They're all hammering home on this year over year number. Oh my God, 9.2%. Well, if they were concentrated on month to month, they would be like, oh my God, 18% annualized for last June. But now they're starting to talk about month over month more, which I think is very, very important. So, expected kind of the new Squawk expectation is 0.5%. I've seen that's, I would say, a pretty good average of forecasts. Most forecasts I've seen are 0.4 to 0.6. So 0.5 is right there in the middle. Okay, so the previous, which was December's CPI, had changed to plus 0.1%, a number which was negative 0.1% until last Friday's change in seasonal adjustment and weighting components. With the annual rate rising to or falling to 6.2% year over year from 6.5% in December due to base effects. All right. The CPI will be underpinned by a small rise in energy prices and persistent strength in food inflation, Credit Suisse says. Though the sharp fall in used vehicle prices seen in recent months is unlikely to persist. Yeah, but that's a small component. It's more of a leading indicator than than an effect, right? For the core measure, inflation is likely to have risen 0.4% month over month, matching the pace seen in December, though the annual rate is seen slowing to 5.5% year over year in January from 5.7% previously. So the market is, if this is a big miss to the downside, or even a miss to any part of the downside, let's say it comes in at 0.3, heaven forbid 0.2, that would be huge. But 0.3, the markets will react positively. But even if it does come in at 0.5, I think that what it does is it decreases uncertainty. So when you think about pricing in the marketplace, especially in a bull market, when prices want to rise, asset prices want to rise. If there's uncertainty in the market, and we've seen this a lot in Bitcoin, it's very hard for the price to catch major bids, to have this reinforcing FOMO behind it if there's massive uncertainty. So as we approach CPI, uncertainty in the market builds. And then when CPI drops, uncertainty is relieved. So CPI would have to overshoot, I think, in January to have major effects on the market. I think we would need to see 0.6, 0.7 month over month to really have a big negative effect on this market. If we come in at 0.5, I think it's going to be relatively priced in, relatively neutral. If we come in under, which I expect, we'll see, then yeah, we will have a big market rally. All right. What is perhaps most remarkable is that at a time when many in the market had decided the time has come to shift attention away from inflation and to jobs, we are again obsessing with CPI. Yeah, well, that's because it's the time of month. I thought this was an interesting chart. Let's see if I can blow this up for you guys real quick. This is the revisions, and you can see the light blue line is the old, and the dark blue line is the new. And so the dark blue line has kind of evened it out a little bit more, but there is definitely a bias to the downside here. And that is what we call transitory here. Okay, let's shift over here, do a refresh on this page. It is 8:29, 1 minute. Let's take a look at markets. Bitcoin does not look very good here right now. It's kind of struggling to go up. We'll see how it reacts. The dollar sitting at 102.9, so it's slightly down on the day. Let's take a look at stocks. Stocks were up yesterday. Sorry, futures. This is going to be delayed, but they are up overnight. Oil is down. US 10-year sitting at 3.68, so it's down over the last couple days as well. Okay, did we tick over to 8:30 yet? No. So I'm going to go down to the 5-minute chart on Bitcoin and watch this as we get a release here. Oh, we must have printed something. The market is really tanking. So CPI for all items rises 0.5% in January as shelter increases. I wonder what X shelter is going to do. So here we go. Here is the press release. If you guys are watching on YouTube, like, share, subscribe, comment down below so more people can find the channel. Also, Twitter, what's up? Make sure you're following me, and Telegram. Hope you guys are having a good day. I haven't been in there much this morning, but I will right after this. So, okay, this is the BLS website for January CPI, and I'm going to zoom in here for you. So January 2023 Consumer Price Index rose 0.5% in January on a seasonally adjusted basis after increasing 0.1% in December, the BLS reported today. Over the last 12 months, the All Items Index increased 6.4% before seasonal adjustment. The index for shelter was by far the largest contributor to the monthly all items increase, accounting for nearly half of the monthly all items increase. Half, guys. So if you take half out, we're at 0.25%. So that is a positive print X shelter, but we'll have to look at that a little bit more in detail later today, with the indexes for food, gasoline, and natural gas also contributing. The food index increased 0.5% over the month, with the food at home index rising 0.4%. So that is higher numbers than I expected, and that it doesn't show reacceleration. I mean, it just shows if you have falling prices, you're going to have a blip in one direction. Who knows why those prices could have done that? I look at things like time of year as well. So you have things going into the new year that might be slightly different, and we could have a single month here that's slightly elevated, 0.5%. What is that? 6% annualized. So I mean, that is higher than I expected, but we'll see how the market is going to take it. We're going to check out the charts here in a second. The energy index increased 2.0% over the month, as all major energy component indices rose over the month. The index for all items less food and energy, so core, rose 0.4%. That's core, and it rose 0.4% last month and again this month. That is, what is that? 4.8% annualized. Categories which increased in January include the shelter, motor vehicles, insurance, recreation apparel, and household furnishings, and operations indices. The indices for used cars and trucks, medical care, and airline fares were amongst those that decreased over the month. The all items index increased 6.4% for the 12 months ending in January. This was the smallest 12-month increase since the period ending in October of 2021. Transitory. The all items less food and energy index rose 5.6% over the last 12 months. Okay, so that's core rose 5.6%, its smallest 12-month increase since December of 2021. The energy index increased 8.7% for the 12 months ending in January, and the food index increased 10% over the last year. And those all track with my actual anecdotal evidence and my own experience that yes, prices have risen over the last 12, 18 months. But it's not what ShadowStat says that we have 10% every year for the last 40 years. We had 10, 20% over the last 18 months. I can totally jive with that, but it is transitory. There is nothing to, what did those prices do? Those prices rose, and now everyone's in a worse position. They're going to cut back on their spending. And you're going to have increase in inventories, cutting of prices. You're going to have the economy is going to slow down, and prices are going to stop rising or fall on an absolute basis. Okay, so let's take a look at the charts, and I will try to post these here into Telegram. This is pretty crazy candle for Bitcoin. Posting that over to Telegram. So immediately we saw a dip of about $300, and then now it's back up $250. Almost erased the entire initial move. We'll see where this nets out, but core was right on expectations. CPI was right on expectations. I don't think there's going to be a major impact from this. So we'll see. And my feed for S&P futures is delayed, so we're not going to see that. I think I can go to another. Stand by 1 second, guys. Is this delayed as well? Yeah, delayed. Yahoo Finance is also delayed, so we're just going to have to go with this and wait. Okay, so we could take a look at some other prices like oil. Oil initially shot higher, kind of with a green Darth Maul candle sort of looking thing, still sitting under $80. And it's amazing. It is truly amazing how the oil has just not been able to do anything of note. Let's take a look at the 10-year, slightly down still, no major reaction. The dollar still slightly down. So the story here is, hey, this is expected. We got exactly what we expected. If you take out shelter, remember, if you take out shelter, which is a lagging indicator. Okay, shelter doesn't have a mind of its own, people. It's not like shelter is the leading indicator like used cars is a leading indicator. Shelter is a lagging part of the CPI. And if everything else is going down, if shelter is contributing half of all the increase, that is significant. That tells you that it's just a matter of time until the rest of everything follows. So I think what the market is going to see here this morning is they're going to understand that this was share this tab, that this was as expected. It was already priced in. It doesn't change the trajectory of lower CPI over the last 6 months. This is a slight bump to the upside, but it is not outside of any sort of random walk in a larger trend downward. So I hope that makes sense. And the market's going to digest this and be like, hey, if we took out shelter, which we know will follow the rest because it's not a leading indicator, it's a trailing indicator, that CPI is coming down. CPI is coming down. And again, and one more thing before I sign off here, guys, is that the whole reason why I called transitory inflation in the beginning was because of, well, I have a good understanding of how money is actually printed in this global financial system. And it's not printed through QE or through government spending. So it's printed in the process of making a loan. And if you have higher prices, the way that an economy can handle higher prices is with higher wages, and then you have a wage price spiral where the wages can support the higher prices. Okay, and people don't have to change necessarily their consumption patterns, right? Because they're able to afford the higher prices, and you just go on with your life, understanding there's high inflation. You might change your purchases, your purchasing behavior slightly towards maybe more durable goods, because there's inflation and you're not going to be saving as much, et cetera, et cetera. But there's a way to support this long term, but that's not what we're going to see. That I knew that from the beginning. We have to have money printing that supports higher prices, else we change our buying behavior. We have demand destruction, and prices come back down, or at least the rate of change stops and maybe reverses slightly. So that's the main reason behind transitory. Another thing too, and we covered this in yesterday's stream, that as we deglobalize, we should expect prices to go up, okay, and our purchasing, our well, everything in our life to change slightly, right? And so we should expect in this time of deglobalization for prices to rise slightly, and it just makes sense because we're not going to be pinching pennies in the supply chain. It's going to be passed on to consumers at slightly higher prices. But is that money printing? No, that's a change in behavior of the marketplace. And it's a natural evolution of the market to secure against fragile supply chains. So anyway, that's where I'm going to leave it here today, guys. Check out bitcoinandmarkets.com. That's my website. You can sign up for the free weekly newsletter that comes out every Monday, and that free membership over there will also get you notified of all my different content when I drop a podcast or newsletter, whatever. And I have a new tier. It's called Premium Market Pro. I'm taking all of my technical and fundamental analysis and predictions and expectations of the future and future trends, as well as actionable forecasts that you guys. You can find that. Go to bitcoinandmarkets.com/pro50 to get 50% off your first month. Trying to build this up to a sustainable thing. I've been extremely accurate over the last 2 years, so there's tons and tons of value in that membership tier. Check it out. All right, guys, thanks for joining me, and I'll check you on the next